Okay, so the bearish divergence we identified on price action versus volume played out per our expectations. The trick now is to identify how strong the downside can be. Very much like the statistics we ran for an upside over the daily time frame, I have also ran a backtest for the downside. Welcome back to the channel on this happy Monday. This is ARCa, and let's dive into ticker symbol STAL. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol STAL. What we are observing here is the bi-daily time frame, of which the descending broadening wedge was played out with, right? So I have this up here right now because I would like for you to kind of retrace onto the targets that we're going to be talking about, right? So in the introduction, what I meant by the bearish divergence was the opposition of volume versus a price action, right? So price action here was at an incline, it was ascending, and we had a descending volume. So that naturally marks off bearish divergence, okay? So, so we're just going to go ahead and leave this chart up so that we can identify the prior supports and resistances as we were climbing the ladder here, right? So I have ran a back test, yes, for the downside, just like we did for the statistics or the probabilities here for the upside. I believe it was actually, right here. So these were the probabilities for the upside targets, right? So this is where we ran that back test. So I actually went a little more elaborate this time, just to kind of front here, right? Just to flex. Okay, so I actually created standard deviation on a normal distribution chart for ticker symbol STAL here for the downside, right? So the criteria is anytime that volatility starts to contract, as you see here, it's already starting to contract, right? Paired with stochastic momentum with a downside pivot, I have taken note of every iteration where that has happened on the daily time frame, right? So that criteria has led to this data set right over here. So 7 total iterations throughout the entire trading history of the daily time frame here on STAL. So 5 of which were guessed correctly to the downside, right? So that gives us an average. Sorry about these. This was just kind of like a copy paste, right? So that I could save some time. But on this time, it would be downside accuracy, right? So this would be the average breakdown. It wouldn't be an upside thrust, right? So this would be the breakdown, right? So you know what I mean, right? So just like this. So the average downside accuracy comes out to 71.43% with an average breakdown of about 54.57% over the span of about 32.4 days. Now I did calculate the standard deviation based on this, and that standard deviation came out to 23.20. And I also went ahead and calculated the upper bounds and lower bounds of the first, second, and third standard deviations. But I'm just going to go ahead and be clear here that the second and third standard deviations will not be able to be used because they are greater than 100% loss, right? So that's obvious. We're not, we can't go beyond 100% because there's only so much you can lose beyond zero, right? So otherwise it being a huge rug pull, right? So anyway, so yeah, we're going to go ahead and calculate the downside targets based on the standard deviation, the average, the mean itself, right? And the lower bound of the first standard deviation. So meaning that yes, this is going to be the lower bound of the first standard deviation, landing at 68% of the results. Then we're going to go ahead and ignore these because they are more than 100% loss, right? And here's your mean of minus 54.57%, right? The average downside or the average breakdown. Okay, so let's go ahead and take a look at those targets. Now, of course, the first, what is it called? The standard deviation itself of 23.20%, of course, that's right over here, right? That met almost right away, coming up to a target of about 0124, right? Remember that the top side we faced here was about 0177, I think. Yeah, just about 177, almost to the 2 cent mark. right? So now furthering the analysis here, or going down to the average breakdown or to the mean. The mean is actually very much confluent to a shorter time frame, one spot 618 golden mean, otherwise known as the golden ratio for the Fibonacci sequence, right? So that comes down to two zeros and 7 4, and that statistic is coming down to two zeros and 7 2, very, very confluent with that geometric target as well. And now let's see. So this would be the lower bound of the first standard deviation at 77%, being this one over here, 77.77. That comes out to a target of about two zeros and 3 4. Actually, the statistics lead to two zeros and 3 6 when the Fibonacci ratio 1.618 golden mean again comes out to two zeros and 3 4. So very, very confluent. So not to mention the fact that the 124 of the standard deviation breakdown, the 23.20%, was very much confluent to the shorter time frame, not 618. So these are all very much in line with golden means, right? So I wanted to just kind of point that out here because it is of incredible importance that we use the statistics here for potential breakdown continuation. Okay, so yeah, this would be statistically speaking, we're actually set to make a downside here to be on average 54.57% breakdown, which would end up right at about this target here of about two zeros and 7 4, and it is a range, and it is also an invalidation zone. So very, very curious for it to land like that, right? So let's go ahead and mark off the area of about two zeros and 7 4 to the area of invalidation, which would be the bottom side of this candle here, the red one that I'm hovering over, right? So that would be the invalidation zone there, which would lead price to a bottom of two zeros and 6 3, which just so happens to be perfectly aligned with the one fib on the larger time frame at two zeros and 6 3 perfectly. Okay, so that could be the area where we could find a bounce. And now please bear in mind that I did speak about another target too. Remember, okay, the lower bound of the first standard deviation being 77.77% is approximately two zeros and 3 4, two zeros and 3 6, right around there. Okay, so which is pretty confluent to the top sides of this range here. So this candle here and these two here, the opening of this candle here, and these right over here with the gap. Okay, so that would be, you know what? Let's just go ahead and draw it in so that we so that we're all on the same page. So this gap right here is literally that it's very much confluent to the two zeros and 3 4 of the 1.618, aka the lower bound of the first standard deviation. Okay, so we're gonna note it. We're gonna note it off from the 0034 to the top side of the gap here, and this would be our range: two zeros and 39 to two zeros and 34 for the bottom side targets. Okay, so these are the potentials. Doesn't mean we're going there, because remember that statistics are just statistics. They're not by any means any certainty of any kind. Okay, and yeah, we're just running a back test here. That's all it is. And now to use like very trivial or rudimentary downside analyses here, I guess we can use candle formation, right? So yeah. We do have an iteration of a daily bearish engulfing, right? So that would be the green candle getting engulfed by the forward red candle, right? So that you can see this here. That is a very textbook bearish engulfing candle formation, right? So that is definitely signaling a downside continuation. So this paired with let's take a look at the volume profile. I believe that the daily time frame would share a similar profile like the buy daily did for us earlier, right? So let's take a look. Yeah, in fact, it did, right? So this it would be the bearish divergence from volume versus price action paired with a bearish formation, right? And you can see here in the increase of bear volume, right? Complete breakout. And also, I imagine it's a breakout from the moving average on volume too. Yep. So this is the breakdown. This is the moving average from volume, and you can see here that the bear volume completely broke through that. So this is already signaling bears, right? So this it doesn't mean that it's the end of the play. It just means that it needs to take a breather. It needs a downside here in order for it to continue, right? Because even still, remember that the macro analysis is still kind of favoring the bulls here. Although we did start converting this SMA 10 into a resistance as of today's price action, it's still nonetheless a bullish buy formation. And we're seeing here that most of these engulfing candle iterations are being utilized here, right, by price action, right? And that's why I'm kind of bringing this potential up, right, from the daily time frame, because if there's any engulfing candles that are being respected here, it's definitely the bearish engulfing, right? Here's one, here's another one right over here, and I do okay, yeah, this is we just identified that one there. Here's another one right over here, and the one right at the beginning of the price action right here, right? So yeah, many bearish engulfings on a monthly time frame being respected here. So it is a bit that I'm kind of suggesting that the daily time frame would act like the monthly, because it definitely would, and it would have a lesser strike rate. But still, it's just there's a lot of things kind of validating that downside. There's a lot going towards the bears here than the bulls, but it doesn't appear to be a complete breakdown, as in you're going to lose everything that you've gained. But I would like for you to be careful and always treat any downside as such, right? So please, please, please be careful. But statistically speaking, yes, we do have a 71.43% chance that we would meet an average breakdown of minus 54.57%. So yeah, that would be entailing a loss of 50%, your contribution from down here, right? So yeah, just I'm talking about paper trades here, and I want you to be careful with the markets. That's all I'm trying to say. And yeah, statistics are what they are, technicals are what they are, but we're just merging them together for a deeper edge. Okay, so now to validate a continuation here, we can definitely use the RSI, right? So the RSI is indicating a short-term, very, very short-term, tiny, tiny upside here before a continuation to the way down. Seeing that the SMA 14 represented by the pink line is resistance. And yeah, so let's see. The 3-hour time frame, I'm not going to use that. Let me use the bi-hourly and the hourly. Okay, so bi-hourly time frame is in the gravitational zone here, getting ready for a downside. 6-hour time frame is suggesting a continuation. So is the 12-hour is sitting in the gravitational zone of the bull strength percentile. This would certainly start to come down a bit. So the trick here is to find out where we're going to get caught, right, by support. So, and now this is the daily time frame entering the gravitational zone of the bull strength percentile for a continuation to the downside and breaking way beneath the SMA 14, all of which are doing that presently, right? And now the buy daily is kind of where it is. So magically, the buy daily is where we have all of the targets here, right? So yeah, so now speaking on the stats targets, now we know that the RSI is suggesting a support bounce from the SMA 14 right down here, which by then would be located, it's already there actually, in the gravitational zone of the bear weakness percentile, meaning that we would face a support from not only the bear gravitational zone here, but also the SMA 14 for a bounce to the upside. Two supports is better than one, right? So now, so now that we know that the buy daily time frame is the one to follow, so let's go ahead and take a look at our buy daily formation that we've been looking at since the beginning of time, right? So, or at least since my man Scalped pointed the stock out again for me. It's been a long time. Okay, so yeah, so now statistically speaking, we do have a bottom side here of 2 zeros and 7.4 to the range of about 2 zeros and 6.3. So 2 zeros and 7.4 actually rhymes with the bottom side of our resistance. This was our discretionary resistance that we pointed out first before identifying this top side, the genesis of the take profit, right? So yeah, lining up very well with our discretionary bottom side. And not only that, is the EMA 9 is also located right there as well. at 2 zeros and 7 zeros. So now 2 zeros and 7 0 to 2 zeros and 7 4. Sure, that could be a potential there too. Now let's go ahead and go back to the stats here and see what else we have. So the bottom side targets, other than this, would be, of course, the targets that we were observing here of 2 zeros and 3 9 and 2 zeros and 3 4. So 2 zeros and 3 9, we actually didn't start charting there. So 2 zeros and 3 9 would be located right about here, right? So I guess that would be the bottom side of this candle iteration, right at 2 zeros and 3 7, right? So yeah, that is confluent with some targets. So I would actually pair that just in case price action does go there, right? So I'm not saying that it's going there. We're just preparing, okay? 2 zeros and 3 7 to the top side of this candle here, which shares, yeah, I think, actually, let me see. I'll try to be, yeah, it would actually be here instead. 2 zeros and 3 5, right? So the bottom side of this wick here and the top side of this candle here would be the most relevant targets, at least to in a discretionary manner to the naked eye, right? So again, that bottom side target, just in case, 2 zeros and 3 5 to 2 zeros and 3 7, and yeah. So I guess just for giggles here, the 0124, which was very close to the 0382 of 0119 and the 0618 of 0127. The only real thing I can correlate that with would be let's see. Oh, actually, damn. It was definitely our FOMO targets, 0121 and 0129. So yeah, this was the and I bet we actually touched it too. Let me see. Yeah, we actually, damn, we definitely did. We retraced and bounced right from the statistical target here. And that bottom side was 2 zeros. The low was, let's see. Yeah, 130. And it was supposed to be a 128 bottom, right? So very nice touch of the statistical target and then eventually failed, right? So yeah, it matched very well. So the statistics played out pretty efficiently here. All right, team. So now that you know that, please remember to reserve your seat for the ARC Masters trading course, as this is going to be the very last course I will ever teach again. I need to get to trading. I said to myself that tracks 1 and 2 would be my final tracks to teach, right? But now I'm here on 3 and 4 and very likely going to stop here, okay, team? So I have opened up another 30 seats, of which are already getting filled. So go ahead and get in touch with me at arcmasterscourse@gmail.com for a 16-week mentorship. And I will be going over everything from the very beginnings of trading, right? Like the very fundamental things like what is a candle, what is a chart, all the way up to advanced topics in mathematical application. Okay, team, so now you know the risks, you know the upsides and the downsides and the shilling here, right? So let's go ahead and just cut it off here. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios.